Okay, tonight we're doing a review of the top 2 stocks to buy under $20. A reminder that most active funds do not beat the S&P 500 long term and to always do your own research. But coming in at number 2, we have Cenovus CVE stock. Cenovus has returned 9%. The average analyst rating is a strong buy and the average 1-year forecast is 77%. We have this one as a buy as well, and we've put a target price of 10.3% over the next year. Very strong financials for this one, very good debt levels. And very, very impressive dividend history with a pretty good yield of 3.4 right now. This is also a Zacks ranked number 1 right now. However, they have beat their latest earnings call, but they have missed their 3 before that. So that's something to keep in mind. But the biggest bear case for Cenovus right now by far is the geopolitical uncertainty in Venezuela. We're already seeing some Venezuelan oil head into the US, and that could be a big threat to Canadian heavy crude, something that Cenovus relies heavily on. And they're fully integrated and fully invested in the oil sands, so that could particularly hit them harder than other companies that maybe don't have as much investment in the sector. But for that reason, we've upgraded the risk to medium. We put the reward as medium. Cenovus for us is a buy right now. But the number 1 stock to buy under $20 on our list is Ford F stock. Ford's returned 58.5% this year. The average analyst rating is a hold, and the average 1-year forecast is negative. It's a negative 9.7%. Very good dividend for Ford, 5.2, and our rating is a buy, and our target price is 47.7%. Very impressive. Beat their last 2 earnings calls. U.S. market share is still climbing. They have about 13.2% right now. Very impressive. It was 12% for a long time. One of the best dividend stocks you can buy. We really like Ford here. Same with Verizon and Cenovus as well. But Ford in particularly just has that super reliable dividend that just consistently pushes out a really nice yield, hovering around 4 to 5% historically speaking. Good EPS growth forecast for Ford, mostly due to strong hybrid demand. Good mix of insider buying and selling going on right now as well, and good industry forecasts of 5 to 9% year over year, compound annual growth rate, of course. However, their EV investments don't seem to be paying off, and they're not expecting to transform, they're now expecting to transform their EV battery factory into a data center. That shows you how well that's going. And recent investments into level 3 autonomy has been a bit of a gamble, or seen as such. So those are the pros and cons about Ford. We think it's a medium risk, medium reward stock, so we've put Ford as a buy because we just can't get enough of that dividend. But those are the top 2 stocks to buy right now under $20. Click this link, drop a like, and I'll see you next video.